Hi everyone, and welcome back to this financial reviews on the financial market, which is the weekly market technical analysis on each Monday. Here is François. It's your first time to discover me. I'm really happy to find you again and to discuss of the techniques or aspects of the financial market. And yes, I would like to first thank you so much for to help me for reaching the 250 people which is follow GSTA, and I hope that I giving to you the best content ever on the financial market, which is related to your activity as well as a retail trader. And if you would like to going further, we kindly recommend you to keep in touch with us for really your framework, and also if you want to learn and master the how financial markets works, I definitely recommend you to come to us and to join our academy, which is Global Street Trader Academy. You can find us through different social media as Instagram, YouTube channel, Facebook channel, Facebook page, and Pinterest and all this stuff. Okay, so if you are also Canadian resident, or you stay in Canada, you can call me in direct line, which is 514-943-4416, or send me an email as contact@GSTacademy in one word .com, or also send a message at the Facebook Messenger. Okay. So sorry again for the noise all around from while I'm recording this video, because I'm staying around the construction site, and there's some also impacting the quality of the sound. And I got some recently a technical issue with my computer, so I don't know what happened that, but I think that the sound is okay. But sorry again if you detect some noises in background. Okay, so this weekend will be awesome. It's just concerned to the final World Cup, where France won of course the World Cup. They are champion, and I would like also congrats some French people which is follow this broadcast, and I hope that you're doing well also with the summer, and you got a nice time with your family, and that is the most important for me. Okay, so let's come back now for trading. So as I told you, often trading is very risky activity. You need to be aware, and you need to know all the aspect which can permit you or allow you to avoid to lose money. So it's very important to take your time and to read all the stuff which is help you to progress in this field. So that's why I recommend you before to going alone on the financial market, the most important things to do is to be referred by a professional as GSTA or at me, François. And if there's a question about your personal finance or personal banking, then you can consulting your personal advisor, which is the best person to ask some question about the money that you can put in financial market, and do your own works and your own research to make fortify your capital. Okay, so don't put the money that you can afford to lose. Okay, that is very important. I think this is the most basically rules of the financial markets. Okay, perfect. So weekly market technical analysis 2022, which is taken account for the weeks to 16 to 21. And again, this week we will at different we see different aspects and different products on the financial market, but it's still the same one, like the on the forex USD CAD, which is the forex pair, the most forex pair trade by Canadian as me or American people, right, through the world for sure. And indices I trade lots Dow Jones, and I know that my community of trading trade as well this asset. Commodity gold, which is very interesting, gold, because is doing recently we can call a lowest level. So because the previous low was 1237, and now we retest again 1,240. We can maybe validating kind of double bottom potentially, so there will be a great signal to buy. We will see technically what does looks like on the market. And also the bond, euro bond, as the European debt, which is aggregated and weighted on the through the Germany as the highest percentage on this product. So this only this product that we see the mostly time at this financial broadcast. And I also put some others financial rubric through my website, where I'm talking about European indices, just US indices, commodity, and also all the forex pairs, which is interest to you for sure for trading. And I think is the members of GST on the website, they have the privilege to see those analysis. Okay, so let's getting in the technically picture. I would like also to show, because it's kind of usual, I show you the US dollar index each broadcast that I do for you, because US dollar index is the most important chart for me, as if you want to trade indices, commodity, indices, commodity, forex, and all the stuff, because all these products are based and related to the dollar. So as the dollar progress, or as the dollar retract, it will be impacting directly or indirectly the functioning of others products. Okay, so as we see here, I saw many people starting to construct like bearish scenario, or no, not bearish scenario, but bullish scenario, or financial or US dollar index. And that's I would like to do, to be very careful with this kind of strategy, because of course, since the short moment, we got like a nice momentum on US dollar index, and we saw that we soar and rally like each week after each week. Of course, it has been supported by the recent information based, the fundamental information based on the comment of the American President Donald Trump, has been outspoken on NATO, financial punishment of NATO, and also he doing also a comment on a Brexit deal with Theresa May, and that's comment. And also he also said that he will add 10% more additional $200 billion for sanctioning the Chinese products. So those this kind of event and comments also feed the progression of the US dollar index for sure. But don't go into the euphoria, because this comment just coming in the politics context. Okay, it's not this context that you have just to focus on it on financial market. You have to look others out of the pictures, and at the pictures we know that the essentially on the US dollar index is basically macroeconomics data, and also sometimes geopolitics facts. Okay, but comments and events could also boost the dollar, and that's what he did with like the European trip, and also the trade war boost the dollar for sure. But it's just like politics and events. It's a politics events and politics news. Okay, but if you look at it deeply in macroeconomics data, we just stay in the same place. Okay, it's just neutral. So you have to be very careful before to intend to build some a positive position on the dollar, because if you also look at it deeply on the technically side, the curve of the filter of Ishimoku, which is called lagging span, didn't cross again. I told you each Monday since like maybe 3 months, he didn't. As long as he's staying in the descending wedge, I cannot pretend construct a bullish scenario because we did not get out of this descending channel. So that's why I just alert you to be very to careful with that, because it's not it might sense in a moment to pretend a bullish position. You can work as a bullish at intraday, or do a scalping related to the pair that you follow as gold, because we saw that when US dollar index is bullish, gold like will be retract, and also the indices also, and the inverted sense also coming when the US dollar index has like a difficult to progress. So if it weakens, the gold will be sore and rally, and also the US dollar index for sure. But as now, I would definitely recommend you to stay neutral, and you can buy or sell whatever you want at the at the short time frame. You're just looking at the great keys to buy or selling level. But if you want to intend to construct like a position, a long-term position or mid-term position, you have to be very careful with the progression of the dollar, because if I hide the Ishimoku indicator, look at it. It's we going until a wide channel, right? Wide descending channel, and we didn't get out again of this descending channel. And look at it, the next candle, which is draw, it looked like summer of like weekends dollar, because there is some resistance, oblique resistance of the level, which is 12,100 like this here. Okay, so as long as we stay below that and we doing the close that, I'm not getting by the US dollar index. It could like just staying on this level to be lateralized, and after that when it will be like weekends, it will for sure get out, because we know that basically one of basically rules of financial market and technical analysis, we short resistance and we buy support. Okay, so this is a nice resistance here, which is the oblique descending, and we have a first contact here, and maybe we have again a second contact here. So probably it's the best time for sure in intraday to buy gold and buy dollar, but not for the long term and short term. That's why I repeat again, we don't know all the information about that. We saw kind of events and politics and news, which is vehicles to some context, but the essentially way to trade, as my sense, is to follow the indicators. Okay, to follow the macroeconomic indicators, and to see which one we showed, yes, which one the best indicators which is related to for trading. Okay, and in that way we see that the NFP and the CPI, which is the inflation, which is like the most of related indicator that the Fed taking in count to increase and to do the tightening policy, is again very mitigate, because the CPI, we saw the result of the CPI, which is the forecast was 0.2%, and the actual progression percentage is also again 0.2% percentage. Okay, so that's why I told you and recommended kindly to keep calm on this financial market, and just to take to just very calm, to not like starting to construct a bullish proposition. Okay, and it is same related as the other pair, which is related to the dollar. So let's go into the USD CAD. So that's why I told you USD CAD. You see, it's just as which is at H4 like time frame, which is intraday, we'll just see before the weekly. Look, as a weekly is clearly we saw a kind of ascending channel, right? So as an ascending channel, we can also, yes, for sure, correct a bit, going back, correct again, and it could be materialized from a double top, which is failing on this gray zone here, which is the best zone for shorting. As we stay here, I recommend you to do not doing anything there, because we can I'm considering that we're neutral, because it's just stuck on the blue line equal here, which is the monthly close. One is $1.31.40, which is a critical level, and monthly I write it for you here. And also we have a fine red line here, which is kind of a pivot point, which is supported by this previous monthly close. So as long as we close on we stuck on this level, I recommend you to just get out of this market, just waiting for that. And if we have some kind of acceleration and pushing for the sell to going back, maybe you can shorting until the POC control, like the POC, which is point of control zone, which is the brown line level here. You see, because it's kind of where sellers and buyers get caught, okay, this level. So that's why if you look on the close at the, let's say the H4, the time frame, we say here that we fell in 2 times, which is very interesting. We're failing 2 times in the gray zone here, 1, and failing again 2 here, okay. So it might looks like a double top, right? But it's it could be a trap too. It's not like just a double top. For sure it look like a double top, because we see consecutively we fell on this gray zone. But just waiting that we get off on this level, you know, the blue line and the red line too. If you stuck in this level, just get out the market, you know, because the retail trader, we didn't know that this kind of trap, they will trap for sure. They will take a position like to buy or sell, and they will just like failing for sure. They will lose money, because people which is trading only in 5 minutes, this range here, we don't doing anything here. We just stay out the market and we just look at it. If you're getting back like out of this level from here, then you can intend to short. Or if you're failing again, as you see here, we're failing at the blue line, which is again the previous close of the June month. You see that the market starting to rally, right? Because it's a kind of support level. You see that how the market buy this level, maybe to going to do contact with the $31,750 and then coming back. So it's that's why I told you can doing scalping in intraday or also day trading, but very careful with that, because you could like lose money of this kind of trading, because it's not like very clear. As we saw the graph of the dollar, and it looked like something very not decisive to take a position for sure. So we will pass to see move forward to see the US dollar US 30, the CFD of the DJIA, Dow Jones Industrial Average. So again, we're starting to do weekly time frame. So as a weekly time frame, we see different patterns. I know that it could be like mixed up on the picture, but if I just hide it for this moment, great. So look at like very clearly the this descending again channel, which is materialized by the black dash line here. Okay, we got a nicely bullish, I will show you a nicely bullish candle, as we call the the technical analyst called that Arami. Okay, Arami is a kind of candle, is a candle pattern where we not see we not see the wicks. There's no wicks on it, and they like big body, strong body, which is could be color blue color or green color. If it's that way, that means that the buyers are very confident on this market and they intend to buy the market. This is the first point. And it's a weekly close. Okay, so that means all the previous week were bullish, right? And we close above the orange zone here. This is the second point. We break it and we close with a solid like buyer's pattern, which is Arami. Arami is very power pattern, and we observe that in weekly. So that means we could potentially going to test again the red zone here, which is the last weekly resistance as the like 25,290 to 25,500, which is like the 210 points, which is kind of a zone there, the market where the buyers intend to buy, and if they push strongly the market, we could break it and going until to test like the highest level as maybe 26,500 and all this stuff. But as well as we stock around here, don't buy this market, please. Okay, you have to, if you want to buy Dow Jones, you have to just looking at where the market will doing some kind of pullback at the previous level, and then you can buy it. Okay, but don't buy here, please, because the red zone here has falling. I can tell you maybe 5 times, and it's we look at it like straight in the screen, which is 1 time, 2 time, 3 time, 4 time, 6 time here, and then we again each time we collapse. Okay, so you can buy here and do very careful with that, and intraday you can go into to take a 50 points or 40 points if you do scalping for sure. But if the market going until this level, just stay out of the market. And we can see quickly as how it looks like with Ishimoku. And for sure you see here we see like a wide green cloud, which is like perfectly a good sign for bullish market. Okay, because we just expecting for the like a last rally for all indices. Before that, the recession is supposed to come for the like the severe correction. But look again, the filter of Ishimoku, the lagging span curve. We did not cross again the previous 26 period behind before to entry in this market. So for sure, if you buy here, it could be a nice shot to do, but very careful with this lagging span here. We could go in here and again fail it, as we see, because it takes just the close for 26 period behind. You see that we fail 1 time, 2 times, and 3 times. Okay, it's more clear like here. That's why I recommend you to not buy of this level. Okay, so that's it. That was the trap. And now I'm supposed that you know the trap. Okay, to not be not going to the euphoria and to buy the market. As a small time frame, we saw that an intraday, it's clearly bearish on the dollar, on the US 30, the US 30, which is the CFD of the DJIA, the Dow Jones. Okay, Dow Jones index. And we can see also the distance to join the red zone. There is like a lot to do here, right? There is lots rally to going until this level. So you can buy the market on this level because it's blank, right? It's a blank zone, so we can conquer that. But very careful, because we could have also kind of retract and also pursue its long movement. So I will finish with this part with the the gold. Okay, so gold is always the same song, right? We have a rally, and after, when people getting in confidence, they buy gold, and gold collapse again. And when they lose money, they just get rid of the long position, and we come to be long again, right? But the secret here again, it's the lagging span filter of Ishimoku. Okay, if I'm showing Ishimoku each time, it's not because I don't want to be annoying, it's just because it's the point. Okay, and we saw that the lagging span curve didn't cross this solid oblique on the support here. It just staying like inside the market. We not cross it again, so that means the graph of gold could also rapidly going back to be long, because we did already kind of previous back. Okay, a previous low. We have the dollar here, the 1,000, as we see on the screen, is orange, 1,237, and we stuck here around here. So that's why I recommend you that the market could doing kind of like a fake a bull trap, so not a bull trap, a bear trap. Okay, because people we see in this graph, like we have Ishimoku, we hide it. They were thinking that the market, if the market doing a pullback, that we can short the market. Of course not. Okay, because it's clear, right? When we see the market here, it look like clear, right? That's the market. We go in pullback and we short. But if you put Ishimoku to see deeply what does it likes, we saw that the lagging span here didn't coming again on this green level. So we're very long to intend to shorting, right? Because we not short support, we buy support. Okay, so that's why I recommend you to when you want to do analysis on market. Of course, the indicator didn't give you the way where you have to buy or sell for sure, but they give you so much information that you can detect yourself the way to buy or sell the market. Okay, and it's not like kind of are we buying if the market, if the lagging span coming here and fell here, I will buy it. No, we don't trade like that. We trade as we understand what we do, and also we understand what's doing others, the markets. So as the news, as the geopolitical news, which is feeding the evolution of gold, and also we trade also the evolution of the dollar. So if you see that the dollar show kind of weakens, and also the geopoliticals feeding the gold in the right way, then we can intend to buy the market. Okay, but and I don't recommend you to trade gold at the CFD. Trade gold as like an intraday. I don't recommend you to trade gold and CFD, because the commission is very prohibitive, and also the spread and is very mixed up. So I recommend you to trade gold and CFD for just like investment, like gold, like long-term position. Or if you want to trade gold as intraday, please like prioritize like futures market, right? Gold futures is very perfect products for trading in intraday. Okay, so that's why I show you that, because I know that some people are very long on gold, and me too, but I won't buy gold in that position. Okay, I will buy gold when the market show me that is the right time, and for sure I will give you this content and this information and I will make sure that you won't miss it, because the right way and the right time, the perfect time to buy gold, if you buy it, you could make, if you have great capital, you could make million with that for sure, just one trade. Because let's see that if you buy gold for example at the 1,220, and the gold follows its progression, which is show that is bullish, and we leave 1,220 to maybe 1,600. It's like 400 progression. right? So 400 progression multiplied by your like the numbers of contract that you put on it, so you can make lots of money with that. So that's why I'm very like emotional for when I'm talking gold, because it would be the right time and the best time, and not the good time again, but the timing to buy gold and to make money with that. It would depend of the it would depend of how the news are like react with gold. If the news like going to the gold sense, then I will let you know for that for sure. For people which is follow GSTF for sure. So now just be patient again and just stay out the market. Okay, we can, as I told you, you can make trading for like gold as a futures market for sure if you trade on future. But at the CFD, if you want to buy gold, it's not the best moment. Okay, so let me finish with this partial broadcast with the Eurobond as usual. So Eurobond, as we see on the week here, on the long-term graph, we see that we again on the descending channel and descending wedge. So it's long-term expecting to rally and to get out of this orange zone. But as long as we stuck again at this purple zone, it's kind of magnet zone. So we just like look at it, the bonds. We know that fundamentally with the ECB comment and Mario Draghi said that the like as we call the PAP, the purchasing asset program, which is QE, right? QE bis, is supposed to stay until the 2019. So that means the euro dollar, the euro are they put it on pressure, and the euro bond is supposed to progress again over the next the next quarterly is coming, right? So that's why there isn't something like happen on this market. We just stay on the market, we look at it, and when it will retract again to test a previous level like orange zone, or maybe fell here, we can do scalping. And this including also products. I recommend you to not trade in CFD because it has the same problem with gold, and this advanced market is just have the same problem on the CFD. Is not like we cannot trade with this product because there is a very expensive, and also have a like large commission, abusive commission, and spread also. They could kill you for that for sure. So that's why if you want to trade Eurobond, it's better in futures market, right? So there's nothing to do on Eurobond. Stay just neutral, but we know that it's supposed to going bullish, but it's not the right time to buy bond, and I will let you know that for sure through the next financial broker that I will show you. Okay, so for the recap again, for USD CAD technical short term, we have to stay neutral for sure. Technical long term is neutral to bearish because we are in kind of ascending channel, which is the mostly time materialized by the bearish movement. Indices, which is Dow Jones, the technical short term is neutral to bullish, and technical long term is very neutral. I know that it's very tempting to buy Dow Jones. You can do that on the intraday, as I told you, but just waiting after the retract, sorry, to buy it the lowest price as much, and then you can go into looking for 60 point or 40 points. That would be great, right? And gold and also commodity, you know the points. Technical short term looks bearish to neutral, and long term is neutral to bullish. Eurobond is same thing, neutral to bullish, and technical is neutral to bullish again. So this is the keys level that I giving to you free, and then you can take a note and very follows this level, because it's the most important level that we as a key zone, as I call key level to watch. And the POC, the point of control, again, it's a kind of sellers and buyers get caught it. So that means the market, if you break it like strongly, the market could like collapse. And if you going into POC, like the point of control, and we just fell on this level, then we can have some much confidence to buy strongly if you want, with leverage, and like take the most greater position as long as well. Okay, so that's why I call POC, and it's very important. For gold is the 1230 to 1250. It depends, it's because it's a wide range, but it could also going below that, like 1225 also, right? So you have to be very careful with that. And I will leave you with that, and thank you so much for watching this video. If you like it, for sure, please feel free to like it, to comment, to put some reviews comment to the Facebook review section, and also share it to your friend and people which is, you know, that they have some attractive interest with trading. And also I see you around, and we will talk you about later. Okay, so it was François for GST Canada. It's 8:50. Thank you so much. Bye.